What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and hopefully you have watched yesterday's video. If you haven't, definitely go and watch that first, purely because you'll have a lot more context and understanding on my bias for the week. Now you can see that price delivered pretty nicely as we anticipated, with us trading higher in towards the premium PD array, which is this fair value gap, and you can see that we have actually overshot it. Now, this is not a problem. Why? Because we were expecting rallying at the beginning of the week, so this is all supportive of that. We expect quite a lot of movement on days after non-farm payroll. That's not surprising, as you can see with Monday. And then that also allows us to start thinking about, us potentially making the high of the week moving into Tuesday and Wednesday, assuming we are going to trade lower, which was my bias. Now, let's take a closer look. So you'll see this fair value gap. You can see it looks like we're about to close above the 50% level. Obviously, we still have 3 hours left. But assuming we closed above this 50% level, that means that this fair value gap should now act as an inversion fair value gap, and therefore provide support for price to help keep pushing it higher and trade on into the premium. So if that's the case, I then now have my eyes on this level right here, which is a rejection block level. And the reason I've got my eyes on this is because, well, you can see we've traded through the daily fair value gap. We've hit the bearish order block. Did we get the reaction we wanted? Not particularly. And then this will be the next PD array to look for. Obviously, if we overshoot this high right here, then it's likely we are going to be reaching for this fair value gap, right? However, I'm not in a rush to be thinking about that because my bias is bearish. So as far as I'm concerned, I'm looking for price to try and make some kind of high or turn in this premium range right here. Now, this is a rejection block level purely because you can see how on Wednesday price traded right up into Tuesday's opening. So you see how we tapped into it and then traded away aggressively. That makes this level, this range, a rejection block range. So as price comes back into it for the second time, assuming we do get into moving into tomorrow, then we should anticipate the same. And the very highest it should be able to trade up there is the 50% level again. So let's get that marked out like so. We can put daily rejection block level. Ooh. Now for the record, when I do trade, I've only recently started trading off daily and 4-hour PD arrays. So just because it helps with my moves and me being more patient. So I will talk more on that this week. But nonetheless, I'll be looking very closely to see how price behaves once we do start to reach up into this premium. So tomorrow, I'm happy to see continued rallying. However, I don't want to see us overshoot that 50% level. And I'd like to think, if anything, we'll start to see quite a lot of resistance as we start to push up into this range. Assuming, again, we close above the 50% level, we should be able to see that continued support. So let's drop down to the 4-hour. Also, shout out to Thabo. He dropped a comment suggesting that I get a indicator for the daily dividers. So when we drop down to the 1 hour, 15 minute, etc., it'll make things a lot easier for us. So yeah, shout out to him. I don't know why I didn't think of using that before rather than having to paint them myself. Nonetheless, let's continue. So you can see how I've traded up into this. Even this is a rejection block level, and look how price is acting. You see we came into it and then rejected away from it. And that's because, again, we're looking at this long wick. And although we traded, I'm looking at this wick trading into this wick the same way I'm looking at how this wick has traded into this wick. And although it's happened before, so although this wick came before, there was one live stream that ICT did, and he's taught about this, about how it can still act as a rejection block, even if the rejection essentially is happening before. But nonetheless, here's that buy side liquidity we ran, absolutely gorgeously traded through that like butter. Like, you can see how nicely and how cleanly price moved today. And again, that's typical of days following non-farm payroll. We expect a lot of movement, and obviously it's in the direction and the bias which we anticipated. So beautiful day. Let's get rid of this buy side since it's been tagged now. And then what's also interesting is you can see how price is acting around that 50% level of the daily fair value gap I was talking about. So we want to continue to see this kind of, almost resistance at this level. So look at how the volume is still staying above it. Yes, we're wicking around it, but volume is staying above it, and that's again supportive of the likelihood that we are going to see us run up towards our rejection block level and potentially run that Monday high as well. Here's that rejection block level from the daily I was talking about. Oh no, it's not. What is this? My bad, guys. Yeah, that's a rejection block as an example. Let me get rid of that. Here's a rejection block from the daily. Here is a gap. Now this is a complete volume imbalance, and you can see there's no volume in here at all. So although we've wicked into it here and we've just tapped into it today on Monday, this is lacking complete volume. So this is even more reason as to why I want to see price draw up into this premium, because as far as I'm concerned, it should be attempting to try and fill this imbalance. So moving into tomorrow, again, assuming we close above 50% level, I'll then be looking at the 25% level of this range. Because as far as I'm concerned, price shouldn't even need to get back below here. The way it's traded around this, it shouldn't need to come back below there. Wait, it's blue. Moving into tomorrow, I want to see continued support and see if we can fill this imbalance. And then if it does hit that rejection block, I'll simply stop. It's as simple as that. And then we'll wait. Obviously, if we get the reaction we're looking for, if price is struggling, then we can start anticipating potential reversal setups. But nonetheless, I'm still happy to see us trading higher into the premiums. So let's drop down to the 1 hour. Let's now use this indicator. This is the first time I'm actually using it, but it is saving me time. If you guys can suggest any... Oh, it's not giving me the future ones, which is interesting. If you guys can suggest any more, do drop a comment below, because this is my first time using indicators in general. But nonetheless, you can see clear consolidation, a lot of back and forth price action around this range. And then again, technically this bullish order block should be able to hold itself, assuming we are going to trade on higher, which is also in line with the inside of the daily bearish order blocks low. So it's interesting, because when you go to the daily and you look at this low, so that's that level right here, price will treat order blocks as fair value gaps. Pretty much everything's just the same. It's just like different displays of them. But what I'm saying is that now that we're inside of this bearish order block, right, we might find, and it's common to find, that it treats it like a fair value gap, in that once we're traded above it and we're closed inside of it, it will use this now as support, and we want this level, the low of it, as a support level to help send price higher. So we might witness that tomorrow, but nonetheless, I am definitely looking at these Monday highs, and I'm looking at, remember, this is a volume imbalance. There's an imbalance again. There's a lack of volume there. I want to see price trade into that and ideally fill it and come out of it. Again, once it gets above it, it'll treat it as an inversion fair value gap, and it'll keep rallying. But if it can reject at it, then it'll use it as a rejection level and, start to fall away from it. So that's how I'm watching that. But nonetheless, that is my target moving into Tuesday. So that's going to be everything on dollar. I hope that all makes sense. The daily dividers are helping in that I can see, you can see a clear model happening here, buy model. And then you can see this is where the last high was, right? And you can see that if this is the last bearish order block, and it just happens to be inside the daily bearish order block, and it's also lining up with our breaker, high, low, higher, high, there's high probability that price can turn there if we're bearish. If we're not, it will simply overshoot it and we will know it straight away. But my point is, I'm looking at these high premiums to act as high premiums for price. That's going to make it struggle, but we'll see once we get up there. But yeah, I hope it all makes sense. Let's clear up a few things. If there's much to clear, I'll get rid of this. And I'm gonna keep the rest all on here, because like I said, this 25% level of the daily fair value gap should, generally speaking, be able to provide support for price. So I'm gonna head on to GBP USD right now. Let's start on the daily, and you can see how we delivered to the downside just as anticipated. And you can see, look at how price traded right down to that 25% level I was talking about. So again, go watch that video if you haven't already. We didn't get a reaction away from it though, which is interesting. So I was saying that price should come down to here, and then we might be able to find it turns. We've ran out south side stops here, ran out south stops here. But obviously, if we're expecting dollar to keep rallying, that means we can anticipate pound to keep falling. So I'm happy for price to continue to fill the fair value gap, which I've delineated. But it's just very interesting, isn't it, to see how price trades right to the 25% level and treats it like so. So something for you guys to go study. Let's now drop down to the 4 hour and take a closer look. And you can see that pound is acting quite bearishly indeed, traded up into this fair value gap, and you can see some nice rejection coming away from that. And again, there's a little, I think it's like an hourly fair value gap below here that I'd like to see us trade down into. So everything's pretty much the same. Little consolidation going on once we got down into the sell side. Again, all they're doing is building in orders, they're building in stops. When you see consolidation, it's making things stronger. And when it makes things stronger, it's simply building orders above and below the market. So when you think about it like that, it makes things a lot more logical. Whether it's true or not is another story. But nonetheless, I'm still looking at this hourly fair value gap down in this discount to see if price can crawl down into there tomorrow. Then once it gets there, if we can come out of it, that would be lovely. If not, it's not the end of the world, and we'll start thinking about these lows. But generally speaking, I'd like to think that this will be the very low of the week. and then we can see some kind of turnaround moving forward. So let's go to the 15-minute, and you can see we kind of just made our way quite difficult way of getting down. Nonetheless, these lows are looking very smooth, so again, I'm expecting those to get grabbed. And remember, this is a daily fair value gap. It's an imbalance, and we're expecting imbalances to be filled. So I'm happy for price, like I said, to fill that imbalance, and then once it gets here, I'll be paying very close attention to the time and see if price can get out of that mud. So that's going to be everything on pound. I hope that all makes sense. Yeah, let's finish up on Euro USD. We are going to start on the daily here as well. Now, I didn't Euro is interesting for its day. So Euro, nowhere near as much expansion as on pound, not a problem. Oh, wait a minute. I'm looking at GBP, JPY. Guys, I've just woken up from a nap. Allow me. Right, there we go. I was going to say, I was like, no way. Yeah. So this is the bullish order block I brought our attention to on Euro, and I was saying, remember, go watch yesterday's video. I was saying if it should show support. Is this showing any support, guys? Clearly not. So now we need to treat it as so. So now that we traded below it, below the close as well, I now want to see it act as resistance to help send us lower and deeper. Where we have a target down here, don't we, that we spoke about yesterday. So now I'm going to be looking at the 25% level of this range, similar to what I did with dollar, but inverted. We'll make it blue. We're going to treat it pretty much as a fair value gap. And then I'll be looking at this range to see, okay, are there any PD arrays around this level, price level, that we can use to help key off to potentially create a high tomorrow that can help us send us deeper, run at that Tuesday low, and then this is our fair value gap with coupled with a bullish order block that I'd ideally like to think the low could maybe be made. So let's go to the 4 hour. Beautiful expansion on Euro. You can see we've closed now below this inversion fair value gap. So again, price shouldn't need to come back up there until we've grabbed some kind of sell side or discount PD array and liquidity. This is the low of that. This is the close of that bearish order block. So again, I'm expecting a lot of resistance and consolidation around this level, which we're already seeing on a 4 hour basis. And this is our order block, which I've called already, that I want to see us this is our fair value gap to try and reach and trade into. So let's go to the 1 hour real quick. You can see a nice consolidation. Look at how price, look at volume, guys. Look at volume. So this is a bearish order block. Tapped into it once, twice, 3, 4. We keep tapping into it. So long as we stay below this bearish order block, I'm happy, because one, is supporting our 25% level off the overall bearish order block from the daily. It's also respecting the 50% level of this bearish order block. And now that we're below price, again, there shouldn't be really any need for us to be rallying back inside there. It should be using it like going bing, as in like using it as like a checkpoint to then run down to its next level. And then there's also some beautiful Tuesday lows hanging below here for us to gobble up for lunch tomorrow. And then once it gets to the fair value gap, I'm watching very carefully to see, again, time of day and how price is behaving around that level to see if it can turn. And yeah, so tomorrow there is only high impact news on pound. And that's interesting because look at how expansive Euro moved compared to pound. You see you can see pound's a lot more consolidated. So all the movement that pound's lacking is likely going to show it tomorrow. So although we're targeting here, we should also allow that 50% level. Let's see if there's any imbalances. There's not really any imbalances, so to speak. But what I'm saying is that it's not surprising to see much more consolidation on pound when there's high impact news for pound, but not Euro later on in the week. Like I'm saying now, like Tuesday is when pound's news is. So that's where we're going to see pound start to get busy, and we need to allow that and allow room for that. I hope that all makes sense, guys. Definitely smash subscribe, drop a like, drop a comment, join the mailing list, join the Discord, and yeah, thanks so much for watching, and I'll catch you guys tomorrow. Peace.